Here's the Russell 2000 chart versus that blue line. That is altcoins. We also have this one, the 4-year cycle for Bitcoin, most likely over. What does it have to do with? It has to do with the Fed balance sheet. And then we have gold. This is gold versus Bitcoin. This is gold versus altcoins. I want to just break down all of these different points to you as we jump into this video. This has everything to do with my bull thesis that continues right now, even amidst a lot of uncertainty. So hit the subscribe and like on the way in. If you're not in our intelligence system, please click the link below. We have a free trial still going on. You can try out our risk models and start strategizing and planning for take profit and accumulation areas. So I want to start with this, the Russell 2000. This chart, everybody, this chart preceded the last bull run. That is, when this chart broke out into its own bull run, this preceded the bull run for altcoins. What is the Russell 2000? It's, first off, it's the bars that you see on this chart is the Russell 2000. In blue that you see here, this is altcoins. The Russell 2000 is basically an index of 2,000 small cap companies. So essentially, when it comes to risk on, these are the growth sensitive side of the stock market. So if you think of just altcoins versus Bitcoin, this is like traditional stock market stocks, the lower caps versus the bigger ones. That's what we're looking at. This is like the altcoin version of the stock market. So because small caps often rally early when liquidity and risk appetite return to markets, that's why we want to keep a close eye on the Russell 2000. So I saw this post, Russell 2000 made a new all-time high today. This is the first major sign of liquidity moving into risk on assets. But we need a sustained rally in the Russell 2000 for some time before alts start to catch up. Maybe the markets have started to price in rate cuts and the end of QT. So if we just get rid of altcoins for a second on this chart, you can just see it is looking like it wants to really start breaking away, breaking into price discovery. Still too early to tell. Even this week, there's still 3 days, 8 hours. This could go one way or another. This could be another resistance for this chart. We saw something similar on altcoin charts, but I want to draw your attention to back here, last cycle, November 2020. It started escaping the previous all-time high, right? And there it goes. So if we bring into play the total crypto market cap, excluding Bitcoin in blue, check it out. That move, when it started breaking all-time high, preceded this altcoin move. So this thing started going crazy, and then slowly altcoins started going crazy as well, and they started breaking out towards their all-time high areas into the bull run. So here we are again, and you can see consolidating in blue is the altcoin charts, and we are waiting to see if we get the Russell 2000 breakout. So this is something to pay attention to, I would say, in terms of just liquidity returning to markets. That is, this could signal that investors are rotating back into higher risk assets like altcoins. So that's one thing to keep an eye on. And then we take this story further. I saw this, the Bitcoin 4-year cycle most likely over. The Fed has now started to do monetary easing, which means Bitcoin could peak in 2026. A lot of people, I think, are just frustrated with content creators, even like me, that have been like, we've been so bullish for so long. And even a year ago, we're just like, man, the bull run is coming, everybody. But we've had an extended business cycle. And that's one thing I want to talk about in this video. We even see this post. This is Samson talking about exactly what I'm saying. And I want to show you a very quick clip. Check it out.
Cycle doesn't seem to have played out. We're behind schedule. We should have had a bull run already, like a massive run up. And we're down actually at the time of this recording. So I think this cycle, if you want to call it a cycle, is delayed. It might push into next year.
So this is a very popular theory amongst bulls, rightfully so, kind of tracking the data that the cycle has been extended. And it has everything to do with this chart, the Fed balance sheet, the quantitative tightening versus quantitative easing that we see across cycles. So this is saying, always remember that it was never about a 4-year cycle, but about liquidity. And then here we have Powell saying that QT will end in the coming months. So I know I talked about this in the recent video, but I want to just kind of go through a couple points here in terms of this chart, because I think this explains it nicely. And now that we're looking at Russell 2000, now that we're looking at gold versus Bitcoin and altcoin charts, I think this is helpful context, macro context for this analysis. So this post, very quickly, QT is when the Fed removes money from the system. Less money is tighter conditions. Risk assets, like crypto, usually drop. And this is what we've seen. Here's QT in green on the Fed balance sheet, and that's like basically the bear market that we've been in and have gone through. And realize when I talk about or bear market, we've seen, if you look at the bars on this chart, altcoins have been in higher high, higher low pattern. It's just not been parabolic. And then we go and we look at the next point here. Now, Powell says QT will end soon. That means the Fed will stop reducing liquidity. Money will stop leaving the system. When liquidity stops shrinking, markets can finally breathe again. That's why it's bullish for Bitcoin stocks and most risk assets. So if we do get a flippening of this chart, and it doesn't even have to go into just crazy QE, but the slowing down of the contraction phase can really, really fuel a crypto bull run. So that's the Fed balance sheet data. And then I want to go over and I really want to start looking at gold. Gold going absolutely, you can see this absolutely beyond insanity. You see this chart literally go vertical. This, the biggest bull run in history for gold. That's what the chart looks like. Now, I saw itrustcapital, and I want to take this moment to give a shout out to today's sponsor of the video, itrustcapital. But they did this post just like 8 days ago. Why are investors buying gold? This is incredibly important to crypto. Gold as a hedge against geopolitical tensions. Gold as a hedge against inflation. I would say gold as a hedge against uncertainty when it comes to monetary policy. What's the Fed going to do? Gold as a hedge against the stock market. Buy and sell gold at itrustcapital. So they obviously have gold over here, but they're making really good points in terms of why is the gold chart going parabolic? Now, what's important to note is what happens when it stops going parabolic? What happens to crypto when gold starts consolidating? I'm going to show you that chart in a moment. But again, if you don't have an itrustcapital account, if you're a macro investor, yes, you can buy gold and silver within your crypto IRA, but you can also buy and sell crypto. So if you're somebody that's like me and you have an interest in trading cryptos on the macro, maybe you are like me. Maybe there are still some bulls out there that think there's going to be an altcoin bull run, right? And something like Ethereum just kind of finally breaks out and goes crazy, and you want to rotate out of Ethereum to USD, to Bitcoin, you want to do it tax-free. That is what the itrustcapital accounts allow you to do. The IRA will allow you to do that, make these macro tax-free trades. So go get signed up with them. There will be a link below in this video. So here's the gold chart. What does it look like in relation to altcoins? What does it look like in relation to Bitcoin? Well, here's the Bitcoin chart. So Bitcoin is in the orange line that you see here. Gold is actually the bars chart that you see. It's going absolutely nuts. And you can just see, even on the short term, while it has been going nuts, Bitcoin has kind of just been sideways, right? We've put in an all-time high, but it's just been very sideways for quite some time. This is going back to July, and gold has just been going really crazy. The thing that I really want to show you is kind of these moments of divergence, but especially last cycle. I want to show you this on the Bitcoin chart and then the altcoin chart, but you can actually even see right here. This is Bitcoin making an all-time high, right? Back here, and this is in like December 2024. And at the moment when that was happening, you could see gold consolidating. And you can see gold in the bars going up while while Bitcoin's consolidating. And if you go to last cycle, here's gold right here. Again, not as much as right now going crazy, but here's gold making all-time high, and there's Bitcoin not doing much. And notice the date here, September 2020 going into October, November. Gold starts consolidating. What happens? Bitcoin starts pumping. And then we go look at the same thing on the altcoin charts. Look, this is gold in yellow. Here's the altcoin charts just failing to have that massive breakout. But if we go back to last cycle, similar to what we just saw on the Bitcoin gold chart, here it is. This is in yellow. Again, this is gold starting to consolidate last cycle. And then what happened at that moment? Altcoins started to take off. And when is that? September, October, November 2020. Now, what I find notable is when you go look at our risk models, the altcoin risk model. I know I've covered this in so many different ways, but look at that. Look at the September, October, November 2020 area of last cycle. You see altcoin risk in the 20s. Where are we right now? We're in the 20s. And then you go into specific altcoins and you could start comparing that data. Here's Cardano at a 33. If I randomly just scroll and I choose something like, Algorand, right? Just as very random, you can just go back to September 2020, October 2020, 37. And look, we're at a 54 right now. So this is at a very hold territory on something like Algo, but all of these different models have different risk scores throughout these cycles. Bitcoin at a similar risk score as it was pre-bull market last cycle, that September, October, November area, check it out. 30s and 40s. Where's Bitcoin right now? 46. So if you want to prepare for the next bull run, again, there's no guarantees that we get it. This risk model, for instance, all of our risk models, they're not predictive. They're designed in such a way to help you evaluate risk for when big moves do happen, whether that's to the downside for accumulation or the upside when it becomes time to kind of start taking profits. You want to be alerted for when these risk scores kind of get crazy. And right now we're in a pre-bull move, in my opinion, from a risk model perspective. And I would say the Russell 2000 charts, the Fed balance sheet chart, and really the business cycle in general, and the gold data that we have here, it's just, for me, it's all lining up very nicely to say, you know what, there are no guarantees, but I still think a massive bull run is very much in play for crypto. And that's just me putting out my opinion. I will continue to do that. If I see something change, I'll change my tune. I will create content on that. Obviously, I'm balancing my own risk. I am careful for anything. That means it all just fails and we go into a bear market. I realize that's an option, but I'm just putting the data out there why I think that there is still a lot to go for a crypto bull run. So these are my thoughts today. I wanted to share it with you. Please let me know your thoughts in the comments below. Hit the subscribe, hit the like. I'll see you all in the next video. And if, again, you don't have an iTrust account, check them out. Appreciate them sponsoring this video. I'll see you in the next one. God bless.